Roy Smith is our marketing analyst this week. The USDA Monday released its estimates on quarterly grain stocks and prospective planting acres. The agency is projecting a record 81.5 million acres of soybeans, paired with 91.7 million acres of corn. Nebraska's farmers are expected to plant 5.4 million acres of beans, which, if realized, would be the largest on record. In grain stocks, growers are holding just more than 7 billion bushels of corn and about 992 million bushels of soybeans. Of Nebraska's share, producers are storing 54% of their corn on farm compared to only 20% of their soybeans. Iowa is expected to lead the nation in both corn and soybean plantings, with Illinois projected second in both. We started our interview with Roy Wednesday afternoon discussing the USDA's latest set of numbers.
It was quite a report. It's one that a lot of people really look forward to, some positively and some negatively. And my impression and first take on the thing is that there weren't any numbers that were a big surprise. There were probably some numbers that may move the markets for short term, specifically the increased planting acres of soybeans, but that really wasn't a surprise to anybody. There were a lot of people predicting it. So my attitude was that probably by the time this program is aired, we'll be back to trading the psychology of the markets in cold weather and dry weather and all sorts of things like that.
At a certain point, we might get to some of that cold weather, and delayed planting could start to fuel some markets and maybe buy even more soybean acres. Is that possible?
I think that there isn't a question in my mind that the weather is, at some point, is probably going to have quite an effect on the markets. And maybe not so much right now because the market is anticipating bigger acres of beans, but the other side of that is that the old crop beans cash are very tight supply. So we almost have those two things offsetting themselves.
Right. I mean, it's almost a difference between long-term in soybeans and short-term in soybeans. Short-term you have short supply, but long-term there is a big crop in Brazil and there will be a lot of acres in the future.
Well, that's what's anticipated, and when you think about that, you really have to think back to what was the market's attitude about the Brazilian crop, several months ago. I mean, there was a period of time there where all we heard on market shows was Brazil's going to break the soybean market, and look, here we are now over $14, and it didn't exactly break the market, even though everybody says there's a big crop down there, but we haven't seen it, and we haven't seen them able to deliver. That may be a bigger thing.
Some shows even went down there to report from Brazil. I don't know if you're familiar with any of those shows, but I might star on one of them. You said, and I'll pat you on the back here, that it's maybe not a good idea to sell beans in February again this year, and that's turning out to be true.
Absolutely. That's one of my rules when I do marketing workshops is you very seldom can say always or never in marketing, because there's almost always an exception. But that's one strategy that has worked for me ever since I've been studying markets, and that is the soybean price in February is never the high price for the year. It may be close. One year it was even the 1st of March, which was one day outside that target range, but it has been very good strategy year in and year out to hold those beans past the 1st of March.
Where we are now, is this a time that you would think about selling the rest if you had them?
Long-term seasonal price charts for corn and soybeans both show a very pronounced tendency to put in this annual high sometime in April, May, or June. I realize that's a big window, but that's about as close as we can get, and that's why I favor dividing the crop up into increments and sell some the 1st of April. A little late to do that today, but somewhere around the 1st of April, some 1st of May, and some up into June, so that you average out. Chances are you're going to average real good compared to the yearly average.
And that's in both soybeans and corn?
Absolutely, soybeans and corn both. We have the same factors in the corn and soybean markets during this time period, and that's risk premium for new crop. Now, what conditions those new crops are planted in has an effect. Obviously, if we're still having frost in the ground the 1st of May, that's going to be bullish corn and bearish beans. But in general, we have the same factors affecting both of them.
I know in this area you don't forward contract a lot because this is dry land. There isn't a lot of irrigated around, so there's no necessary guarantee on what the size of the crop will be. But as you look towards that new crop, do you see any prices that are really favorable that you think might not be there for a while?
Well, we've struggled with this new crop corn situation, and there for a while we were actually below $4 with it, and since then it has come back considerably. At one point this week we were like $4.50, $4.60 for cash bids, and so you need to look at that and say, well, I might want to forward contract some that I can't store at home. What price could I live with? You're probably not going to get a price that's over cost of production yet. It may come later, but not yet. But and you know, the futures bumped up to $5 there for a while this week, and $5 futures subtract off a basis of 30 or 40 cents, and can you live with that price? If you can, probably ought to sell corn, especially sell corn, you know, soon. With soybeans, we have the September crop report. That's always a good time to make sales. We have the dead cat bounce. It's always a good time to make sales. But we also have forward contract prices better than cost of production. So, you know, it sounds like I'm talking out of both sides of my mouth, but hopefully you got 5 or 6 increments and you can do some now and some later.